Good morning and happy Monday. Sorry I'm running just a little bit late. Had a couple of snafus come up, a couple of phone calls I had to make and all that fun stuff. But we're here. Busy real estate weekend. There was a home in the Southeast Valley, went on the market for 3 hours. Had an open house. You only had 3 hours to see it. I think the strange thing is that the agent said, please follow COVID protocol. But yet they cram everybody into this house over a 3 hour period. That was the only time you were allowed to look at this home. It was $600,000. So you were in a situation where you couldn't schedule a showing for 4 in the afternoon or 5 or Sunday. You only had 3 hours to look at this home. So people were just packed in there like sardines because there were only 2 homes available in this subdivision, which is a very, very popular subdivision. And it went pending that night. So if you were still waiting for an indication that the market was brisk or insane, there's a great example. Showed several houses over the weekend. There wasn't one house that I went to where there wasn't a car leaving and a car pulling up. One after another all weekend. So what does it mean? Where are prices going this year? So I kind of took a deep dive into it and started to look at things. So the first thing I like to look at, as you know, is the Cromford Index. And so when I look at it today, actually this is from Friday, you can see that there's some red arrows where the index is going down. So the index is a mix of supply and demand. And so no, Terry, it's not time for another drawing. By the way, congratulations, Terry won a camera. For those of you that tuned in on Friday, we had a good time. So the index is going down, but here's what they say. It's quite understandable for some buyers to drop out of the market because prices are rising beyond their reach. This is true. This is one way rising prices rebalance the market. So you get priced out, you just stop, and eventually the market balances out. However, with all 17 cities over 395, that's the index, we still have some very large price increases ahead of us. A lot more buyers will have to drop out before prices start to stabilize. By the time prices stop rising, they will be at yet a more unaffordable level. Unless supply starts to recover dramatically, this could be many years away. That's kind of distressing, isn't it? Supply has to pop. It has to show up. Here's a little infographic that you get from the Cromford Index. So the Cromford Index is just their number that shows the market, and it shows that the market is in green here, right? So that means that it's balanced is this little yellow arrow right here. Supply is green, which means there's a lot of supply. If it goes to the yellow, that's normal. Look where demand is going. Demand is coming down. Here's the chart on demand. Bing, 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 bing. So demand is getting kind of normal. Well, how can you have rising prices if demand is dropping? Well, because the supply is so low. So the difference between the weak the normal demand here and excruciatingly low supply is going to drive prices up. Look how far that supply has to go. That arrow has to come all the way over here to the yellow. And how long is it going to take to get there? It could be many years away, unless there's something dramatic that pops that makes us start putting homes on the market. Now, I did watch a local real estate executive with an association on YouTube this weekend, and he was saying that he's expecting supply to come flying back up in this summer, July and August. I don't see any numbers. I don't see any trends that are showing us why that's going to happen. There are some numbers out there that are showing that purchase applications are not dropping. And then I'm reading that they are. But when I read at this latest one, I'm going to show you right here, right now, it says the purchase index increased 3% on both an adjusted and unadjusted basis. It was 26% above its level during the same week in 2020. So purchase applications are not dropping. People are still getting financing to purchase a house, but they're starting to stay home at the same time. But you can still have purchase applications increasing and demand drop. It's kind of funny math, but that's kind of where we're situated. So I went back and I said, all right, I'm going to do some calculations here. And I looked at the Cromford Index and I said, well, how long is it going to take for us to get to normal based on the current rate? So I'm looking here and I just kind of got an Excel spreadsheet and I said, all right, if we're going down 7% a month in the index, how long is it going to take? So a year from now, or 12 months out, we're at 244, and that's what this graph shows. Remember, normal's 100. So if we continue this rate of improvement, we're going to be a year out. So then I looked at prices. Now remember, right now in the first 12 weeks of this year, prices have gone up 9%. So if you're standing there looking at a house and it's $300,000, 12 weeks from now, it's going to be worth $27,000 more. That's what the demand is doing to house prices. So I like to look at the average of that zip code and say, okay, what's the price? Because it doesn't do any good to look at comps now. We pulled comps on some houses this weekend, and you go back and you look and you go, this comp goes to November. November doesn't even count anymore. This comp is January. That's 3 months ago. What's going on today? Well, there weren't very many houses to look at even 30 days out. So the only thing that I could do was to go look at the stats that are real numbers that are fast that say, well, in this zip code, 57% of the homes are selling for over their asking price. They're selling for over their asking price an average of $15,000. So that tells you what's going on right now when you're standing in that driveway. So what's that mean? You're looking at a house that's $300,000. On average, people are bidding $315,000. Like it or not, that's where it is. Is it going to appraise? Probably will, because appraisers get to look at the acceleration, and so it's probably going to appraise at that. But then you get this jittery feeling like, wow, I'm gonna pay $15,000 more than what they're asking. Well, in 12 weeks, you're already past that number. And you're past that number because we already know that the demand is coming down only slightly, but inventory is not budging. Until inventory starts coming up, prices will not decline. So you know because of where inventory is today, that next month, next quarter, 12 weeks out, that house is going to be averaging $30,000 more in its price than it is today. So where are we going to be headed for the year? Well, I got my handy dandy little Excel spreadsheet out again. I took a peek and I said, all right, here we are for quarter one already. We're up 9%. Okay. Demand and supply have not changed going into quarter two right now as they did in quarter one. Is it safe to say we're going to have another 9%? Yes, maybe even higher. Another 9%. Now, let's get into the second quarter ends in, let's see, we got March, and then we got second quarter ends June 31st. So July, August, and September, well, let's just say it drops almost in half to 5%. And that trend continues for Q4. You're at almost a 30% increase in prices. That's if I get pessimistic here for quarter three, quarter four. If we continue on this clip, you're at 36%. That's why the Cromford report's saying, based on everything we're seeing, we are going to possibly have a 40% increase in prices. That is dramatic, folks. At that point, buyer fatigue's here. People are priced out. They may still be coming in from other states, but we are seeing this in every state in the union. So nobody is escaping this demand index except for San Francisco and New York. Not New York State, but New York City. So that's the story that we've got going on in the market. Like I say, there's demand starting to pop down just a little bit, but it's hard to say that demand is down when instead of getting 20 offers on your home, you're only getting 15. You can still get in a house. You just have to be prepared. So you have to know your tolerance level. You're buying a payment. You're not buying a price. So when you're standing there trying to figure out where you want to bid, what you want to put in a house, remember to concentrate on the price, because it could be a little overwhelming going, I'm really going to offer $20,000 more than this asking price? And you got to ask yourself, am I going to offer a $75 a month increase to the payment? And what is your payment tolerance? So don't exceed that. And that's how you go out and you shop in a market like this. So challenging times. We keep looking at the numbers, and you're looking at the numbers here so that you can know what's going on in the market, and you can be a hit at cocktail parties. Have a great beginning of the week, folks.